Today, we are going to take a look at Tesla and their earnings. This episode is going to be broken down into two segments. The first segment, we're just going to do a quick overview of some of the highlighted points that happened during this earnings. We're also going to take a look at the price performance. And the second segment is going to be more fundamental analysis performance. I'm going to take a look at their financial documents from their income statement, their balance sheet, their cash flow, and try to see if there's anything good, anything bad happening in there. So if you guys want to learn more about fundamental analysis, make sure to check out that part as well. And while looking at the earnings presentation, I even found a new stock idea that I would like to pursue a little more. So make sure to check that part out as well. So let's get started. And before we go any further, if you are new to my channel, if you are a long-term investor, and if you like to learn about growth stocks, make sure to hit that subscribe button. To all my returning viewers, thank you again for all the support. I truly appreciate it. You guys know if you guys ever want to get in contact with me, YouTube comments is probably the best place. I'm also very active on Twitter. I do have a Discord channel which is free to anybody that wants to join. But remember, all of this is just my opinion. I am by no means a professional, so none of this should be taken as advice. Finally, if you guys want to get more content from me, either in written or weekly newsletter, make sure to check out josenaharo.com and subscribe to my newsletter there. Alright, so the first thing we're going to take a look at is price performance for Tesla. So Tesla after earnings is up 4.5% and is sitting at about $1,665. And let's just take a look at how Tesla has done in the past year. So year to date, Tesla is up 270%. In the past month, Tesla alone is up almost 59%. And in the past 5 days, Tesla is up 7.7%, not counting the close to 5% that it's up right now. So Tesla has been a monster. So congratulations to all the investors that are holding Tesla. All right, so now let's just take a look at some of the headlines of their earnings. First, they did have positive GAAP earnings per share of 50 cents. And this is their fourth quarter of being profitable. This would give them a roadway to finally enter the S&P 500 now that they have a full year of positive earnings per share. All right, so next we're going to talk about revenue. Revenue for this quarter was $6.04 billion. This did beat expectations by $640 million, but it is down about 5% compared to a year ago. Down 5%, I personally thought it was going to be down a lot more, especially with this whole pandemic happening, right? We have places closed down. Tesla shops were down, their factories were down. But so to be down 5% during all this stuff, I believe that's actually that's pretty good. That's pretty impressive in my opinion, right? People right now are not really focused on buying vehicles just because, right, they have more important things to do. I do believe buying a new car is probably the last thing on people's mind. So to see only a 5% decrease in year-to-year revenue, that to me was pretty impressive. They also increased their automotive gross margins. Same time last year was 18.9%. This quarter was 25.4%, and last quarter was 24.1%. So it is better than same time last year, and it is better than last quarter. One thing I do want to mention though are these gross margins. It do include some form of credits that Tesla gets from the countries, from the states, or wherever they're working, just because of the vehicle, the type of vehicle that they're selling. And later on through this episode, when I do more of a fundamental analysis, I do take away those credits just to see how Tesla would be doing without those credits. Again, Tesla even though I am taking it out, at the same time, Tesla, this is the business they're in. And right now, as this electronic vehicle is emerging, I do believe credits will continue for some time. So even though it is I wouldn't say an unfair advantage compared to other vehicles, it comes with the technology growth. And I know a lot of people complain about it. I do see it both ways of why people think using this credit and helping it improve its earnings per share and its revenue and its net income is a bad thing. But at the same time, it is due to their technology growth and the improvement. So I do see both sides of why it's good and why it's bad. And to be honest, this is a Tesla. I do not have a position in Tesla. I am neither a bear nor a bull. I'm just going to be looking at the points I'm seeing and just talk about my opinion on what I see. The next highlight points that I want to talk about is Tesla says is still targeting delivery of 500,000 vehicles in 2020, and it anticipates the Tesla Semi will start delivering in 2021. They also mentioned that production output of their existing facilities continue to improve to meet demand, and they are adding more capacity. Later this year, they will be building 3 factories on 3 continents simultaneously, and I think that is pretty impressive. They did mention one of the new, we're going to take a look real quick, that they did announce a new gigafactory in the United States. So Tesla did announce that they are going to build the new gigafactory in near Austin, Texas. They mentioned it's about 15 minutes from downtown Texas, and they make this factory sound like the most amazing place you want to work in. They're saying that this factory is going to be stunning. It's right on the Colorado River, so we're actually going to have a boardwalk over you, hiking, biking trails, and it's going to be basically an ecological paradise. Again, I am an engineer, so Musk, if you are watching this, make sure to send me a job application. Obviously, if you are my current employer, I'm joking that I'm not trying to find a new job. And the site will be used primarily to build the Cybertruck, semis, the Model 3 and Model Y for the eastern half of North America. Musk also mentioned that they will continue to grow their California plant, where it will build the Tesla Model S, the Model X for global deliveries, and the Tesla Model 3 and Model Y for North America. All right, so that was pretty much a quick overview of what happened during their earnings. Now what I want to do is take a full in-depth analysis of their earnings presentations. So if you guys are, sometimes I do get a lot of new investors. If you guys ever want to find out anything about a company, the best place to go is the company's investors website. So for example, for Tesla, you can go to Google and put Tesla's investors relations or investors website, and it will give you their investors overview. And here you can find things like events, presentations, their financials, accountings, all their filings from 10Q reports, 10K reports. And again, it is a great place if you are new to learn. So here I did take the liberty of already going through it, and I did highlight all the important information that I found. So let's just start off from the beginning. Most of the points I am going to skip because they were some of the financial highlights. So first, let's take a look at their financial summary. In their financial summary, they pretty much just talk about their automotive revenue. We're going to take a look later on through this episode that Tesla has multiple forms of revenue collection, but their biggest, I want to say easily over 75, maybe even over 80% of their total revenue comes from automotives. So here we can see automotive revenue is this their top line. Automotive revenue for this quarter was $5.18 billion. Remember, they had a $6.04 billion of total revenue. So out of that $6 billion, over close to 5.2 comes from automotive. One thing I do want to mention is like this is down 4% compared to the same time last year. And again, we kind of mentioned earlier in this episode why that would take an effect, right? Especially with this whole COVID-19. I was impressed that it was only down 4%. Next, I want to take a look at their regulatory credits. And right, Tesla is in a very special type of market with the electric vehicle, with clean energy and everything like this. And for being in that type of market, they're the kind of either the government, the states, different countries kind of reward them for that because they want to move forward to a cleaner type energy. So they do receive some form of credits for this. So this credit has increased dramatically compared to the same time last year. And this is one thing a lot of bearish investors or bearish people of Tesla are complaining about. Again, I can see both ways for it of why it is a bad thing and why it is a good thing. This has increased about 286%. So same time last year, they received about $100 million in credits. This year, they received close to 428 million in credit. So a huge bump there, over close to 4 times as much. And the reason this really affects this bearish sentiment is this credit is added to the gross profit. So for example, this quarter, Tesla had a gross profit of about $1.3 billion for their automotive section. So remember, they sold about close to $5.2 billion of vehicles revenue. And out of that $5.2 billion of sales, it was about $1.3 billion of gross profit. But out of that 1.3 billion of gross profit, 400 million were pretty much coming from regulatory credits. So one thing I wanted to see is I wanted to see the actual gross margins of Tesla if I did not include those regulatory credits to see if there is some improvements. So first, let's take a look at before we do that, I just want to take a look at their gross margins with the credits. So their gross margins, including the credits for quarter two of this quarter, were 25.4%. Same time last year was 18.9%. So this is a huge gain. It was an increase of about 653 basis points. And again, one of the major reasons for that was because of that huge increase in credit. And let's just take a quick look at the past quarters. So a year ago, quarter two of 2019 was 18.9%. Quarter three of 2019 was 22.8%. Quarter four of 2019 was 22.5%. Quarter one of 2020, and this is quarter one of 2020 was the first quarter when they started seeing a huge bump up of this credit. And that's when they saw a huge bump up in gross margins as well, 25.5%. And this quarter, they saw another bump up of credit and they saw a decent increase in gross margins. So now let's take off those regulatory credits and see what their actual gross margins would be without those. So without those in same time last year, the gross margins would have been 16.8% opposed to the 18.9%. For this quarter, it would be 17.1% opposed to that 25.4%, including it. Even though it is a huge decrease down, it is still better than same time last year. But if we compare it to last quarter it was 18.6% if we don't count those credits, and this quarter we're 17.1%. So there was a decrease over the quarter, but again, remember, there is some crazy times, so maybe as time progresses, this is a method we can look at in the future. And the main reason, next I wanted to take a look at their net income. So net income for this quarter was $104 million. This was way better than same time last year. Last year was actually a loss of $408 million. And again, this is where that bearish thesis of people complaining about Tesla and the credit is, if we don't include this credit that Tesla received this quarter, the net income this quarter would have been negative as well. And actually every quarter minus, actually it would have, quarter three of 2019 would have been positive. Quarter four of 2019 would have been negative. So in the past 5 quarters, if we do not include the credits, only one of those quarters would have been positive. And this is just, again, to me, I understand why the credit is happening. I just wanted to bring it out there for just so people can understand more about it. All right, so next let's take a look at their production. So total production for this quarter was about 82,000 vehicles. This is down 5% compared to the same time last year, and it's down 20% to a quarter ago. So remember, most of this is down due to COVID-19. Again, many people are not buying vehicles, and we're going to see later on that companies are actually down a lot more compared to Tesla. So this is a bullish sentiment to Tesla to see that they're not as down. They're not as bad compared to the other automotive vehicles. Next, total deliveries. Total deliveries this quarter were about close to 91,000 vehicles. This is up 3% compared to same time, compared to last quarter, and it's only down 5% compared to a year ago. So to me, that's actually pretty impressive to see it up 3% compared to same time last quarter. But last quarter was also affected due to COVID-19, and I might have to say it was probably affected even more last quarter, because last quarter was when when all the unknowns were happening and everything was shutting down. Next, I want to see their supercharger stations. Their stations have increased 28% compared to a year ago and 6% to compare to last quarter. And their supercharger connectors have increased 30% to a year ago and 6% to a quarter ago. And again, this tells you that, hey, more EV vehicles are out there in the road, so they have to increase the amount of stations out there. And this is what I was talking about, their vehicle capacity. So Tesla, if we take a look at their vehicle deliveries in the first half of 2020, Tesla is actually up 20, it is up close to 12% compared to same time last year, where every other major vehicle is down close to 20, 30, even 40%. But again, we have to remember that Tesla is in a different level compared to these other big guys. These other big guys have already made a market for themselves. Where Tesla, they just have a huge demand of people that wanna. They don't have the production capacity as these other companies, and their demand is a lot stronger. So by having less capacity and stronger demand, obviously you're gonna see an improvement of deliveries. Where the other companies already have a strong market. They're already distributed it in all these markets. So it is expected for this to see. So again, I do see both the bullish sentiment in there and the bearish sentiment as well. All right, so next I was scrolling through their presentation, and I always enjoy looking at the pictures of the factories and how they improved them. But one thing caught my eye, and while scrolling through there, I found this amazing picture. And you might be like, Jose, what is so amazing about these pictures? It's just a bunch of robot arms. So if you guys don't know, these are automation arms, and automation arms are pretty much an arm that you can program to do a certain task or multiple tasks depending on the code. So they're used to create vehicles. They're also used to create a lot more other factories, right? It's not only for vehicles. They have other types of abilities as well. It might be to lift things. It might be to move things around between factories. But I'm like, hey, look at all these purchases. And I do believe automation robotics like this is something that's going to continue to improve. So I'm like, who creates all these products? So I try to find somewhere if they had a name somewhere. And if you zoom in here through their presentation, we can see that the provider of these robotic arms is a company called KUKA, Kuka. So I'm like, all right, let's try to see if they're a public traded company. So I end up Googling KUKA. So let's just try KUKA robotics stocks. Robotics, let's just try KUKA robotics stocks, and they come out. So here they are a ticker, and they are traded in the off the counter market. But again, this doesn't mean I'm gonna go and buy this company, but it tells me that, hey, the type of market is there. So now that I know this automation company and it's a German manufacturer, I can start. They also give you what other people search. So Fanuc is another one, that's another robotic. Yaskawa Motam Robotics. Then we have ABB. So now I have a list of robotic companies that I might want to do a little more research on and try to see what kind of growth they're seeing. And these might be some nice investment opportunities in the future. So if you guys want me to take a look at, make sure to let me know in the comments. But I did find this pretty interesting, and Detective Jose was on the case for this one. All right, so now let's take a look at their statement of operations. So it's pretty much their income statement. And like I mentioned earlier in this episode, Tesla has multiple forms of revenue, but their biggest revenue collection is automotive revenue. So automotive sales was 5.1 billion dollars this quarter. Most of it comes from automotive sales. So automotive sales was $4.9 billion. Then they also do automotive leasing. So when you lease a vehicle, they also make some form of money from there. That was $268 million. The first thing I want to show is, yes, there was a decrease in automotive sales, but there was, compared to the same time last year, but there was an increase in automotive leasing. The second type of revenue they collect is from energy generation and storage. So Tesla is also an energy company. Unfortunately, this is not a segment that really grabs my attention too much, especially out of that total $6 billion of total revenue. It only makes up 370 million. So not close, a little bit over 5% of total revenue comes from energy generation and storage. Then the third type of revenue collection comes from services and others, and this is either automotive services or their energy services as well. Again, this doesn't make up a huge portion. Like I mentioned, over 80% of total revenue comes from total automotive revenue. But I just wanted to see if there was what was increasing and what was decreasing. So like we said, we saw a decrease in automotive sales, but we did see an increase in automotive leasing. We saw a decrease, pretty much a flat line in the energy business for them. This quarter was 370 million, compared to same time last year was 369 million. Service and others was down compared to same time last year. This quarter was about 490 million compared to 600 million last year. I want to say probably the main reason is a lot of their services were closed because of the whole pandemic, so they weren't able to collect that form of revenue. All right, so next I wanted to take a look at their cost of revenue. So their cost of revenue is exactly what it sounds, right? It's what it cost them to collect that revenue. So like I mentioned earlier, this company collected about close to $5.2 billion of total automotive revenue. Out of that total automotive revenue of 5.2, it cost them close to $3.9 billion to make those sales. But that total automotive revenue is down compared to same time last year, and I found that to be pretty cool. Even though their total revenue compared to a year ago is only down about 200 million, their cost of revenue is down closer to $500 million. So that to me tells me one thing, that they are getting better at their cost savings. They're doing smarter things in their plans. They're just the way things are progressing there is helping them reduce their total cost. And as things continue to get better in the plants, that costs are going to continue to go down. Next, I wanted to take a look at their balance sheet. And if you guys are familiar with my channel, this is probably my favorite document to take a look at, because you can really see everything that's happening in the company through here. So the first thing I want to take a look at is their cash and cash equivalents. So cash and cash equivalents right now is sitting at about $8.6 billion compared to a year ago where it was $5 billion. So a huge increase there. I'm happy to see that. Total, so that's close to a $4 billion increase in cash compared to a year ago. Now let's take a look at their total current assets. Total current assets last year were $10 billion. Right now they're $15 billion. Again, most of that coming from cash and cash equivalents. So I'm happy to see total current assets up $5 billion. You don't only want to see an increase in total current assets. Total current assets increased by $5 billion. Later on, we have to make sure that liabilities did not increase by that similar levels, because you can say, hey, they increased their cash by $4 billion. One way a company is able to increase their cash by $4 billion is by taking out a $4 billion loan. So obviously that would, if you see a $4 billion increase in total debt, then it doesn't make this increase that much, that good. But we're going to see that's not the case. But again, it's just something I wanted to mention. But before we go to total liabilities, let's take a look at total assets. So total assets a year ago were about $32 billion. Right now they're $38 billion, so an increase of about $6 billion. $5 billion came from that total current assets, mainly from the cash and cash equivalent increase. The other $1 billion came from an increase of $1 billion of property, plants, and equipment. Again, as they're building more plants, as they're getting more equipment, that is going to continue to go up. So their total assets increased by about, like I mentioned, closer to $6 billion. Now let's take a look at total liabilities. And let's just jump all the way to the bottom. Total liabilities last year were closer to $25 billion. Total liabilities this quarter were $27 billion. So total liabilities only increased by about $2 billion, while total assets increased by $6 billion. So that to me is a great way to move a balance sheet, right? If I had money, I would obviously love to have $60 increase in cash and only $20 increase in debt. That to me is telling me that I'm making smart moves. I wanted to take a look at their total long-term debt. Their total long-term debt last year were $11 billion and now it's sitting at $10 billion, so it's down a nice amount. Again, this balance sheet seems pretty good to me. I'm liking that total asset increase. I'm liking not that huge increase in total liabilities. So I think that's it for today's episode. Like I said, it was pretty heavily here at the end where we did more of number looks. But I hope you guys found it somewhat interesting and kind of learned something about it. Unfortunately, they do this presentation kind of wide, so I couldn't really zoom in for you guys. But that's why I was just mainly mentioning numbers. Also, let me know if you guys want me to take a look at those robotic arms. I think that is a pretty cool automation business to take a look in for future episodes. But again, I understand both the bullish and bearish case scenario for Tesla. And I do see why I don't. For example, I'm neither a bull nor bear of Tesla, and I'm not gonna go and buy any due to their earnings. And I do think their earnings were great. But again, to me, I might have missed the boat already, and I like my holdings at the moment, and my holdings right now are closer to 46 positions, pretty similar to ARK style investment. And if you guys haven't seen that video, make sure to check out that episode on ARK where they're actually Tesla's their biggest positions in most of their ETFs. And if you guys just want to learn more about growth style investments, make sure to check out my other videos. I do have a video on my 40K portfolio and how even a position of 46 portfolio with 46 positions, I am destroying the market right now, and I'm pretty happy with the way I'm investing. Again, there's multiple ways to invest, and like I said, Tesla is one that I do feel could fit my portfolio, but for some reason, it's not something that calls out to me. For me, I do believe there might be better chances out there for me. Again, it all depends on the investor that you are. Obviously, if I do see a huge decreased price in Tesla, it would be one that I would be more eagerly to jump in. Again, some of the bearish things and bullish scenarios where I can see fights happening are between that credit that Tesla receives, and the second thing is Tesla promoting that, hey, we're doing so much better than these other automotive companies. But remember, you are in a whole different stage in business compared to the others ones. Those have already created a full market. They are the amount of vehicles out there of Mercedes, the amount of vehicles out there of Honda, Toyota, Volkswagen is uncomparable to what Tesla has in the road. So obviously you're going to see more people wanting to buy the newer item at the moment, and there's a bigger demand. So I do see both the bullish and bearish case scenario in there. So I hope you guys enjoyed today's episode. Let me know what you think. Make sure to leave a comment, hit the subscribe button, and the thumbs up. Take care, guys. Have a good night, and see you next time.